I want to talk about sort of what has changed from a tax perspective over the last year or so, what creators should be looking into for 2026 from a tax perspective. Like, give us your overview of the current tax landscape, what shifted in the last little while, and what might have changed from a practical perspective that creators really need to be looking out for.
Yeah, I mean the the big beautiful bill was released this past year. A bunch of notable changes there. This one was a little odd, just because they had some of the items in the bill were retroactive. I think one favorite that I know a lot of real estate people take advantage of, but we see a lot of use from our content creators as well. The bonus depreciation being 100%. And so I think everybody's mind immediately jumps to like vehicles. Again, for real estate, for example, that's a huge thing, a huge win for anybody in that industry. But for our creators, there's a lot of applicability there with, if you're buying a new PC or any larger asset that you might be purchasing to do the work that you're doing. That's going to be a big boon, if you will, for a lot of the creators we work with. Beyond that, really, I think everybody kind of got worked up about the tips thing. Everybody's probably familiar with the no tax on tips. How would that impact creators, specifically live streamers? You
Garrett,
see a lot of,
how many questions did you get about that when it came out?
yeah, I mean, honestly, through Twitter DMs, I got from both clients and non-clients. So we just had a ton of, I don't know how many specifically. I mean, I would estimate it was over like 50 at a minimum, just people reaching out wanting to know, how it was going to impact them. And sadly, a lot of this happened, before the Treasury regs and everything were finalized. And so while the bill was released, how things get truly handled on the back end, us accountants rely on the IRS to kind of put in motion, like this is how we're actually going to handle things. These are the true mechanics of it. Because when the bill comes down from Congress, ultimately it's Congress saying this is what we want. And then the IRS has to come back behind them and say, okay, how is that actually going to look on a form? What's it going to consist of? So,
Well, let me take a quick step back there and go to
yeah,
like really fundamental stuff. Streamers, when they're getting payments made through the platform, have you been treating those as tips traditionally?
the way we code it, when we do a lot of bookkeeping for our clients, and then obviously how it ends up on the tax return, it's traditionally been not combined. We have platform income is what we call it, and a lot of those tips and donations actually we end up seeing come through like PayPal, for example. So on Twitch, you'll have your 1099 for the actual entertainment, the services you're offering, and then the tips are processed through a payment processor. Our clients like to see it different ways, and I think Joseph could probably speak that out to that a little bit better. Some of them it's just consolidated into one revenue account, and then on the tax return it's just one revenue account. And we've never really had a reason where we had to treat it differently. Now, obviously, with the bill, creators have asked to see it differently. I'll let Joseph speak to that here in a second, but I do want to point out just really quick as it relates back to just what has changed. That's one that everybody asked about, but ultimately probably won't change much at all for creators. And the reason is pretty much every content creator we work with is what the IRS deems as a specified service trade or business, because all of the content they produce relies on them as a creator. If it was a creator who had a ton of contract labor, a ton of editors, thumbnail artists, you name it, there may be an argument there. But generally speaking, eventually the IRS came out with updated regs and everything and said, okay, these are the groups of people this will apply to, and these are the people who won't. Your traditional restaurant employee who, obviously gets tips every time they service a table or something like that, it's definitely going to apply to them in general. But for content creators, even though they list out digital creators on in the regulations, unfortunately, because most creators are specified service trader businesses, they're not going to benefit from the deduction. Joseph and I, interestingly enough, we had an example. We have a content creator who does live tattooing. He live streams. He is a tattoo artist, but he live streams it. The tips that he gets for the services performed as a tattoo artist compared to the tips that he gets as a content creator, we have to do a little bit of digging in this case, but this is a rare example where we do have to look deeper and see if, as the tattoo artist, if he's going to benefit from the no tax on tips. Other than that, though, I mean, that's kind of like an extreme case. And generally speaking, if you just live stream on Twitch, you may not benefit from it overall. Joseph, was there anything bookkeeping wise? Again, I don't, clients typically don't ask us to break those out on their books, on their financials. But Joseph, did you have any, you want to provide any levity there on that?
No, yeah, I mean, you nailed it. I mean, usually tip donations that come through either it's PayPal or even through the platform just get classified as streaming income, and just all ultimately all gets classified as ordinary income on their, from their business. So
Hopefully that answers the question. I mean,
Yeah,
there
I
are
mean,
other minor
it
things.
sounds like the change is kind of nil then for basically all your clients in that space.
That one will be. The other notable changes are just standard increases that you would see, almost inflation adjustments for like the actual marginal tax brackets. Self-employment wage base is up.
standard deduction.
Standard deductions up. Yeah. So the usual incremental increases. I think the one that content creators will probably benefit from the most are the retirement accounts. If you're maxing out, for example, your 401k from your content creation business, that limit has increased as well. So um, that's pretty general though, nothing crazy. I think the final thing would be the state and local income tax. If you're itemizing on your tax return, itemizing your deductions, that limit was increased from a cap of $10,000 to 40,000. That removes a lot of kind of the workaround we would have to do with the what we call SALT, but it's the state and local income tax deduction. So um, it's probably more beneficial because it reduces compliance cost across the board. You're not going to have to get all, you're not going to have to get fancy with and now the verbiage is slipping from me, but the SALT workaround that you might do with your business. That applies to very few creators. Typically speaking, the largest ones would take advantage of that, but it's still something. Overall, Adam, if I can be honest with you, the one big beautiful bill as it relates to creators, it's not going to do a ton. It's not going to change a ton of things that we weren't already taking advantage of. So, um, I guess fortunately or unfortunately, that's kind of how everything's going to fall.
Um, let's then take a step back from changes because it sounds like you just pointed out there's really not going to be much that needs to be different this year specifically. But let's talk about kind of like general approaches. Where in general with your clients are you seeing creators or streamers getting sort of caught off guard when they file? Like what changes should they be making from day one, January 1, so when the April deadline comes around, they're all set.
I mean, I can say immediately tracking your bookkeeping. We call it bookkeeping a lot of times when we get on new client calls, discovery calls, and we're talking through it. We get asked a lot of times, like, what is bookkeeping? What does that entail? Just tracking income and expenses and doing it throughout the year rather than all at one time. I think everybody would be surprised by how much they forget and how quickly they forget. When we ask, Joseph can speak to this, but it's funny going back and looking at a set of books when we do catch up for a client, and we ask them, "What is this transaction in January for $1,100?" Right, and they can't tell us, and the bank description that it gives us is very minimal. Especially, I mean, PayPal is even worse at times. So I would say bookkeeping. I'll let Joseph bring more on that subject, but from a pure tax standpoint, other than that, making sure you have all your 1099s, and if you don't have them, going back to whoever it may be. It could be a talent agency, it could be some brands that you work with, got sponsorships from, anything like that. Go back and get them because it's actually it is important. If we even by accident don't report a 1099 and the IRS is expecting to see it, that's one of those things where it's not an actual agent you're dealing with, it's a cross examination by a computer. So when the computer sees your return initially, they're expecting to see some level of income, you know, based on the amount of 1099 income that they're showing, right? Because every time you get a 1099, that means the IRS got a copy of it as well. So they're just trying to cross check that. And if we don't report those 1099s, it it could trigger a notice that is just kind of an annoyance to deal with. And it may not even be that you actually did anything wrong. It's just the way it was truly reported on the return doesn't check out with the IRS, and they want more information. And that's never fun. We never want to give them a reason to come back and start asking questions, right? We'd just rather file it above board the first time. Joseph, was there anything from the bookkeeping standpoint? Because I feel like that's probably the most important part, but the other things, like, they just kind of help out as well.
Yeah, I mean, definitely echoing that sentiment of just tracking in real time. You're going to guarantee to miss out on deductions if you're waiting until the end of the year to go back through your bank statements and figure stuff out. You're going to forget things. Like Garrett said, even for the clients that we do it for, sometimes we have questions about previous months or even at this point, January. It could have been a year ago, last January, and they don't remember. So yeah, definitely staying on top of it or having someone help you with it. The only other thing I would say from day one, Adam, is if creator is thinking about doing a retirement plan in the current year, just getting ahead of that and thinking about it before the year's closed. So many creators, whether it is retirement or an S corp election, which we'll get into some of that later, they think about it now because it's tax season, but you can't take action on it now for last year, right? That had to be done in the calendar year, and there's certain compliance that needs to be done in the calendar year. So if you have questions about these things or you're thinking about them, don't just think about it in January, February, March, whenever you're thinking about taxes, when the TurboTax commercials start coming up. Actually, take a note down and think about it throughout the year so that, you actually have time to implement those changes.
What type of retirement plans do you see a lot of your clients implementing these days?
I'll let
Yeah,
you take
that's
that one, Garrett.
yeah. I mean, that's a great question. I think the default, because I think the advertising around them is much better. But like a traditional IRA and a Roth IRA, those are the two basic ones that not just anyone can contribute to, but definitely those are the ones that everybody I feel like defaults to. Um, when you're running your own business, though, the contribution limits to a traditional and a Roth IRA are usually very small. Like in the past, it's been around 7,000, 7,500. It's grossed up a little bit generally speaking, every year, but those are still relatively small contribution limits. Once you have your own business and we formalize that and get everything rolling, you actually, typically speaking, are qualified to set up your own 401k for your business, or what we call a SEP IRA, SEP. Obviously, I don't expect everybody to remember all the verbiage from this call. We're talking taxes, but if you write that down, those are the only two you have to worry about generally. And the 401k and the SEP IRA, those two, the limits on those are like $70,000, or at least they were for last year. This year, I believe it's 72,000. So those contribution limits are much higher. And when you're dealing with a creator who's making $500,000, $600,000 potentially or more, that's a very real deduction. It's hard for us to look around and find $70,000 deductions just on a whim. And the retirement's one we can almost always fall back on if you're in a higher tax bracket. That's almost always an option. And so those are, generally speaking, if I had to write it down for somebody, you're looking at four options. You have two that are specifically related to your business, and then you have the two personal options, which are your traditional and your Roth IRA.
Just to clarify for anyone who hasn't worked two hand in hand with an accountant, you're not setting those up for your clients, right? You're just helping with the payments, right?
Yeah, we typically will assist with setup, just in getting general business information to the client, making sure the broker's good. We'll even hop on a joint call if we need to, just with the initial setup. Generally speaking, again, that's something we're going to rely on the client to help do, or even maybe their financial advisor. We get involved when we have to. But once you move money into that account, we're definitely not the ones managing that. That, again, you need to rely on a professional to do that. We can't do it. We're not financial advisors. We don't have the qualifications to, advise on investments, stocks, bonds, mutual funds, all that stuff.
What I
Um,
will say is that, to add to that, Adam, is there are some platforms out there that do make it really easy to do it. So sometimes we'll tell a client, if they don't have the funds to go engage a financial advisor to do it, if they don't want to, or they want to move quickly, there is platforms they can go set up a SEP or a solid 401k themselves. And as Garrett said, we're just kind of saying, okay, here's the information they're probably going to ask for, and then they actually will handle it. It just depends on the client and if they actually like taking stuff in, ownership of their own stuff or just outsourcing it.
Yeah.
Adam, Adam, how, some clients are much more like, some are very capable and they want to be hands-on and they want to do it themselves. And then some are very laid back, and they almost panic when they're asked to fill out a form with the business name, all that stuff. And so if we need to get on and walk them through it, obviously we will. But most of the time, yeah, to Joseph's point, the the software these days is so much better than it used to be, and it's not a paper form. You can do most of it digital. It's not as complex as it used to be. Those account setups are generally pretty easy. To Joseph's point earlier, the only thing I want to say is we've had a lot of scenarios where clients decided mid to late December they wanted to set up a 401k. Very few providers will do it within 30 days. So again, that's something if you're considering doing it, even if you're on the fence, you're not sure if the funds will be available, this and that, there's no harm in setting up an account and then potentially funding it later. You can at least set it up now, again, when you're thinking about it and it's not, mid-December, because
Seems
that,
to me like the best time to start thinking about it would be during tax season anyways for the next year. So
yeah,
this is when all your numbers are coming together finally.
yeah.
Jane in the Zoom asks, can you have a SEP and a 401k at the same time?
You actually can. That's pretty common. What we'll oftentimes do is transition people from one to the other depending on their situation. You can maintain the accounts and keep the accounts. The contribution limit of $72,000, I believe, don't quote me on that. I believe for 2026 it's 72K, and last year it was 70. Um, you cap out at that amount. So you could technically do a portion of it to a SEP and a portion of it to a 401k, but the most you can contribute is 72,000. And funny enough, the same thing applies to those two individual accounts I mentioned earlier, traditional and Roth. Again, don't quote me on it yet. I believe the amounts for 2026 are like $7,500. But you can have both accounts, but the max you can contribute to both of them is $7,500. So you could do half to one, half to the other, but once you hit 7,500, you're done. So yes, Jane, to answer your question, you can have all four of them if you wanted to. I mean, you can have a 401k, a traditional IRA, a SEP, and a Roth IRA if you really wanted it.
All right, let's change gears slightly. So, I saw in 2025, it was a rough year for a lot of my creators. It was a year where a lot of them, their income either flatlined or actually was worse than the year before, due to who knows what. But it was fairly consistent along, I'd say, a good majority of the folks I work with. Um, this year seems to be already, going better for a lot of folks I work with as well. So we're happy about that. But talking about sort of looking backwards and looking forwards, one thing that is always top of mind for forecasting is estimated taxes, which I know a lot of your creators are going to have to deal with. So how should creators be thinking about estimated taxes and their cash flow, knowing that year after year can be pretty inconsistent and less predictable, where you might have a boon one year and serious pullback the next.
If I had it my way, I mean, I could sell somebody on a tax plan and then we're tax planning for you year round, but that's not obviously feasible for everybody. At the end of the day, when you get your taxes done, if you're, say, doing them before April 15th, generally, any good accountant that you're working with, even if you do them on TurboTax, they're going to provide you what's called safe harbor estimates. Um, by paying in the safe harbor estimates, you avoid pretty much any underpayment penalty. And that's first and foremost, we want to avoid any penalties, right? So when you're considering estimates, let's at least pay in the safe harbor. But Adam, to your point, in a situation where income maybe drops a little bit, you might realize there's no need for me to pay in all this extra money to the IRS because I know my income is going to be much lower this year. It does come back to tax planning, right? You need to answer, okay, well, how much lower? What is your tax truly going to be when taking into account, the updated marginal brackets, all that stuff? You should ideally hire a professional to help you with that. But in general, if you feel like your income is just going to be way down, maybe even drop off a cliff, which unfortunately we do see occasionally, um, you could technically just stop paying estimates altogether at that point, or pay a much reduced, a further reduced amount. Now, in the other situation, if your income skyrockets, that's when I definitely recommend tax planning, because while you may avoid the underpayment penalty and pay in the estimates based on the safe harbor we talked about previously, nobody likes getting a big tax bill in April. It's just not fun. Even if you pay in estimates and maybe you cut your tax in half, but you just had a great year, so your tax is still a large chunk. Cash flow planning wise, that can become very difficult. Um, so yeah, I want to tell you, consult with a professional. It's not as feasible for everybody. So if you really need something to just lean on, stay with those safe harbor estimates that you typically get when you get your tax return done. Um, But yeah, I mean that's tough, Adam, and honestly, that's kind of why Joseph and I have a job. Is once we get the books done, the tax planning like everything that happens post tax. Everybody wonders what accountants do after tax season. Estimates, estimate planning, making sure our clients are paid in, making sure we're maximizing deductions, all those good things. So, yeah, definitely stick to your safe harbor, but consult a professional if you're really, really unsure.
Great. So, obviously, if your business requires a bookkeeper, you're going to have that person working with you on a monthly basis, if not more frequently. They're going to be really getting into your stuff. A lot of creators obviously don't have bookkeepers. Maybe they don't feel like they're there yet. So, putting the bookkeeping aside, which I think is crucial for anyone running a real business, but putting that aside, let's say you have a creator who's never really worked with an accountant before, knows that they need a professional helping them with taxes. When is the most ideal time to reach out to somebody like you two to be like to basically be onboarded and go like, I need your help for the upcoming tax season?
Joseph, you want to take that one?
I mean, yeah, I would say obviously don't ever hesitate to reach out just because you're not sure if it's a good time. We've helped people that have reached out on April 1st and been able to get them dialed in before the 15th. We try to always leave a little bit of our capacity for that. But as far as the most ideal time, Adam, I would say it's the fall. If you're switching accountants or you're going to work with an accountant for the first time, the fall is a great time because it's going to allow enough time in the calendar year for us to implement changes. Let's say a creator comes to us in August or September, and they're making well above the rate for what we would expect to see maybe an S corp election, but they don't even have an LLC yet. Well, that's going to give us enough time to reach out to someone like Adam and say, hey, we need an LLC set up, and then we're going to do an S corp election, and then we're going to set up payroll and run a payroll, and potentially if income is high enough, maybe even as Garrett said, a SEP or a solid 401k and max fund it. That stuff takes time. And so not only is it going to take time to get you onboarded and learn your numbers and all that good stuff, but it's going to take time to talk with you, Adam, and get the LLC done, then back to us for the S corp. There's enough time there to truly get things dialed in and take action before the end of the year versus that, say that same person comes in December 10th and they think they're being proactive because it's not tax season yet. Now we're left with about 20 days to take those actions. And we have had situations where we are able to move quickly and get an LLC set up quickly and then do an S corp election right at the end of the year. But it's just a lot more of a squeeze. So ideal time for me, I would say, is either right post tax season when it's fresh on your mind or the fall.
Are you guys charging rush fees for those people reaching out on April 1st?
We really do try not to because we kind of keep our rates set. We update them at the beginning of the year and then keep them set. It's client by client basis. No one is the same. We have some folks that come to us that have super clean numbers, and truly them providing the numbers and us doing the return is a very standardized process. And then we have others that, if they need a full year of catch up bookkeeping and their stuff is a wreck and they have 10 accounts, PayPal, credit cards, I mean, yeah, the fees are going to be higher. So.
I would say on that note, I mean, I know we obviously I can speak to us. I can't speak for every accounting firm, but I mean, we just try and be very transparent. If somebody comes to us on April 10th, we just tell them straight up. And I think it's easier because our client demographic is also much younger. We're working with content creators. And so we're not working with the traditional high net worth individuals that may be retired and so on and so forth. The creators, when we speak with them, we just tell them, straight up, like, hey, look, this is pushing it tight. We'll do our best, but if we have to extend your return, we're gonna make sure you're taken care of and you know what's happening. But we may be in a scenario where we have to. It depends on how fast, like Joseph said, they
Just
can get us their stuff.
correctly setting expectations.
Yeah. And
Yeah.
so maybe we should charge a rush charge, but generally speaking, we don't run into issues because we can set expectations and then, finish the return as soon as tax season is over. We do have it happen occasionally, obviously. People, I think it's funny because people, we will never not have people wait until the last minute, no matter, what it is. You never really get away from that. I'm sure, Adam, you've experienced the same. I think Adam, we probably had mutual clients where we're right at the deadline,
Oh,
last minute.
it's like yeah, that
I'm
song
pinging
gets
you and you're pinging
that
me
song
back,
gets
and we're trying
played
to.
almost every week.
Yeah,
So
so
I hear you there.
as part of it.
But let's shift completely now a little bit. You're mentioning company formation and sort of electing and things like that. I'm seeing a really positive trend in the last couple of years, and it feels like it's particularly taking hold this year. And these are things that Joseph and I have been on calls about this in the last week or two with a bunch of clients where creators are growing and they're not necessarily just the individuals that, the general public might associate more, capital I influencers with. It's people who are running media companies, people who are bringing in W-2 employees, people who are creating multiple sub companies to hold on to their different productions or their merchandise companies or the different ventures that they're getting into. And what this means is there's a lot of new considerations that need to be made that maybe an individual creator didn't have to make before. One of you mentioned like, oh, if unless you're hiring a lot of artists to do like thumbnails and stuff for YouTube, your income's pretty straight up. But like that to me that's a consideration from 5 years ago. I'm looking at now like entire production companies going in with some of our creators, creating full-fledged productions that would rival small television shows.
Mhm.
So what makes it exciting from my perspective is we start talking about bigger corporate structures. We start talking about getting creative. But of course, one thing I never touch is how the tax is going to play out in those different structures. And that leads to really interesting opportunities for myself to work with Joseph and Garrett, with our mutual clients, to figure that stuff out. And I think part of the interesting thing that I always have to explain to clients who are kind of new to the space of the corporate world is the concepts between legal and tax are actually, they don't quite butt heads, but they're different. They don't directly speak to each other. For me, 95% of the clients that are coming to me just form what's called a limited liability company, which is basically a really streamlined company structure. I'd be hesitant to even call it a corporate structure because technically it's not. That is sleek and the guts of it are really easy to put together. And it's kind of like a one-stop thing. But I hand that over to Joseph and Garrett, and then they have the opportunity to have it treated completely different, to not just be taxed as what we call a pass-through entity, but to be treated like a corporation based off of how the IRS handles it. And it is very confusing to clients who are new to that, who they'll go and say, hey, my accountant said I need an S corp. And I'll just be like, do you need an S corp or do you need an LLC? It's going to be taxed as an S corp, and it's like it feels like a very Abbott and Costello, who's on first kind of thing sometimes with that. Which is why I love getting these guys on a phone call with the client to be like, here are the different things that we're doing. But taking a step back, getting into all that, let's talk about really basics like entity formation, tax efficiency, liability protection. My perspective with almost everyone, unless you are creating something that's going to have a serious investment strategy with outside investors coming in, is almost always going to be an LLC. You get to draft your operating agreement. Even if you've got multiple partners, it's there for you. It's very, very simple. But from your guys' perspective, you alluded to this a little bit. I want to start by talking about the individual creator who's probably just, say, streaming from their house, doesn't have a lot of outside expenses or parties that they're dealing with. What does that look like from a tax perspective? And then moving into more of what we're seeing, where people are creating new ventures and maybe bringing in employees. When does structure need to change? What makes sense there?
Yeah, I mean, I'll say right away, I think everybody jumps to the accountant because they need to file a tax return every year, and it's kind of it's a thing that everybody knows they have to do. But one thing that people don't consider, like, well, with the LLC, yes, we oftentimes need that to set up an S corp or to do all the things that we want to do on the back end to save a client some money. But also, like, you may just be required to register with your state if you're doing business, and like that's a legal consideration that we don't advise clients on because we're not attorneys. And so we're trying to push people. It's not always an income thing. Usually, we get a client, I'll ask them, "Do you have an LLC?" Right? Very basic, very. It's almost so common. Like for every client, we're asking them that. Do you have one? And Adam, to your point, if they just have an LLC, then for tax purposes, that doesn't change anything for us. It's a legal thing, and so the IRS even calls an LLC, if that's all you have, it's considered disregarded. If you have multiple members, you technically have a partnership by default, but that's very rare. I mean, most of our creators, like you said, somebody's sitting at home doing their own thing. They're the only owner of this entity, and they're just a sole proprietor. We ask them, like, do you have an LLC or not? And if they don't, we're usually like, hey, we're gonna introduce you to Adam, get you set up. He'll get you the LLC. From there, we can get you an EIN number. We can elect S corp status. We can do whatever else we need to do. And even if we don't do those things, again, they may just need an LLC because they need it, right? It may not have anything to do with tax. So that I think over the years, if we've done anything right, it's been getting in touch with Adam, obviously people like yourself, because having that referral base and just being able to handle those things quickly, figuring out what we can and can't do, that's been a giant boon to us. But yeah, I mean that happens so often. I feel like that's probably bread and butter for us is as soon as we do a tax return for somebody where, hey, you probably need to set this up, right? From there, the S election is pretty basic. I mean, we don't set up anybody. We know how much we charge to set up an S corp, and so we're naturally not going to charge somebody to set one up because it is an S corporation is strictly a tax election. It has nothing to do with the legal side. It's just how you want your entity to be taxed. You tell the IRS, hey, instead of being this, I want to be this now. When we do that, there are tax advantages, of course. There are other considerations that go into it as well, but we don't even consider it until a client is making net income wise, probably at a minimum 80 to 100K. And that kind of is getting tight. We want to make sure the client sees some kind of return on that because again, we know what we charge to set it up. So if your costs are
And
going to outweigh the benefit.
What Garrett's speaking to there is tax savings outweighing the cost of setup because the
Yeah.
cost and maintenance. I mean, you're going to have to file a new tax return. You're going to have a payroll. So there's cost year over year as well. That net income number Garrett's speaking about is where the tax savings start outweighing that.
And then when that happens, Adam, we can come back to you and say, hey, just a heads up, it's an S corp now, this and that. It likely won't change anything for you, but that communication and just having now and that's
Now I know. I file it away and never think of it again until there's actual structure changes that needed.
yeah.
With us, anytime a new client comes to us and they're a creator, the first thing we also ask is like, do you have an LLC? And not for tax reasons though, but just for it's in the name, liability reasons, where it's going to act as putting yourself out there to brands, especially. You want to be signing those contracts through your LLC versus through you personally. It's a very simple thing to do. It's the only downsides from my perspective are, the small upfront fees that are associated with it and the little bit of maintenance year over year. But there's no threshold where if you approach a lawyer that they're going to say, oh, you should or shouldn't have an LLC. They're going to say, if you're signing contracts, you might as well just think about it immediately. I think part of the difference too of our legal practice versus your accounting practice is the barrier to entry to work with the lawyers usually a little bit higher. I feel like you talk about income thresholds and we usually deal with slightly more established creators to start. I do think it is absolutely beneficial to talk to an accountant as soon as humanly possible when you're starting to make money through your business. And then as far as like dealing with a lawyer, it's try to reach out to them as soon as you can, but it's probably not as urgent. When contracts start coming your way, when you start making things of value, then you should start thinking about it. But it's not the same sort of urgency that I would say the second you have any income in your pocket, you should look into it.
I understand.
Michelle asked a question in the Zoom. What's the difference between an S corp and an LLC? An LLC taxed as an S corp, and why would you start an LLC if you really want to be an S corp? I have my perspective on this, but I'd be curious to hear your guys' perspective first.
Yeah, no, I'll say when we're talking about entity types, with for every state you have options, right? You have an LLC, you have a partnership, you have you could get limited partnership. You have a corporation, but generally speaking, when Adam, for example, on his side, and Adam, you speak to this, I don't want to talk out the side of my mouth, but when Adam goes to set up an entity with whatever state that you might be in, S Corp is not actually an option. It's an LLC or a corporation. And then what we do on our end is we have to make an election, right? And it's called the check the box election, but you just check a box and say, I want to be taxed as this structure. So the S Corp is not actually a legal entity that you set up. It's tax only. And so to your question, Michelle, is like you can't actually set up just an S Corp. You either have to set up a C corporation or an LLC and then make the election to be taxed as an S Corp. Adam, Am I good
Yeah,
there?
yeah,
Because
no,
I
that makes sense. And I will say from our perspective, the difference between an LLC and a corporation, honestly, is like the amount of paperwork needed for it. An LLC, you just need an operating agreement, which, especially if you're a single member, it is, I will say, probably the single easiest thing that we tend to do in our office because you don't need to come up with anything wildly specific to your business. Now, if you have more than one member in your LLC, that's different. Then you really need to think about what's in that operating agreement. But if you're a single member operating agreement, make sure it's got all the legal requirements, sign it, you put it away, and there's your LLC. That's it. A corporation has a lot of extra steps, setting up bylaws and dealing with minutes and things like that. And having to deal with that year after year is a lot of work. You do have some additional requirements, I think, from the sort of like record keeping perspective when you do elect to become an S corp that you need to think of from the legal perspective as well, but it's still a much lower lift than the requirements for an ongoing corporation. So that's why we're doing it. Like I said earlier, usually the only time we're really considering corporations for our clients is when they are looking into building something that's going to be heavily invested in by outside parties. And that's when you want to have this more elaborate sort of share stock structure that you can work with because it is a little convoluted to start issuing portions of an LLC out to investors. That's a topic for a whole other day, which I do not want to get into today.
I think a lot of that comes down to like niching down into a specific area because we talk about this conversation is guided by what we deal with on a day-to-day basis. And so you could technically have verbiage in the operating agreement that nullifies your S election. It can actually terminate it involuntarily, and that's not good. But the thing is, we know the S corps we're dealing with are far different than like just a general S election where you may have, you know, 10 members and some want some preferred shares, some want like there's one class of stock. It, for us, it's generally a single member LLC that we elect to be taxed as an S corp, and the operating agreement that Adam draws up is very rarely going to involuntarily terminate what we're doing because Adam's client base is the same as our client base, and so his templates are going to be exactly what we need to do our job on our end. It's a perfect fit. And so again, Adam said it earlier, but disclaimer, like you can't just take this advice and apply it to anything. It's we work with a very specific niche target audience. And so for us, it is very streamlined. And it's Adam, you mentioned the cost earlier. I mean, I'll go out and say it like the cost over time, maybe not on the legal side, but we talked about bookkeeping earlier. Those costs will go down over time because when you niche down in a practice, there will be, especially with AI now, there will be things that do get simplified quite a bit. I think it's going to start with bookkeeping. If I'm being completely honest, that will start to trend towards that direction. But, and Adam, I don't know. I guess I don't want to be the one asking the questions here, but I don't know if AI is really impacting anything that you're doing. But
It is. No, it is. I don't know if it's doing a good job of impacting it, but it certainly is. I think, for us, LLC formation is such a simple thing. We fill out a form, we send it out, it comes back, it's formed. The where forming a single member LLC can get expensive is really on the bells and whistles that technically are not part of forming an LLC. What can get expensive is if you go, oh, I want my company name to be this. Can you make sure that it's safe from a trademark perspective? And then we go down a whole rabbit hole of searching trademark registries and doing a wider search to make sure the name is okay. But that's not technically necessary for a company. Us forming something and then creating a single member operating agreement and guiding clients through what they need to do, like really basic, like, oh, set up your bank account, right? That's a massive requirement that every LLC needs to have its own bank account. Can't be your personal bank account. We're talking about minutes of our time. And I imagine it will get easier over time with AI kind of coming in and filling out some of these things for us. But no, the way I look at us forming LLCs for our clients is like it's something that almost all of our clients need. Obviously, we're going to do it, but it's not even the primary thing that we focus on as a law practice. It's just like, yeah, let's get that done and out of the way so we can focus on the real work, which is drafting templates, worrying about IP, negotiating big deals, things that are a little more bespoke and frankly take a little more brain power.
Truly advisory.
Yeah. Yeah. But it's all simple, straightforward stuff. I will say, if we are on the topic of AI, the amount of people coming to me with AI drafted contracts that are terrible starting points. I have a buddy, Gerard, another lawyer sitting 5 feet away from me. He's just chuckling right now because I think every transactional lawyer has had this issue in the last like year or so where clients come to you with like, hey, I want you to draft a contract for me, but I already asked my buddy ChatGPT to take the first pass at it. What do you think about cutting me a deal? And you're like, no, I'm going to charge you the ChatGPT excess fee because this is just causing me more of a headache. That being said, it's getting better, and I would not lie and say that like it's useless. It's definitely helpful. It's good for a first pass of like running ideas by them for weird stuff that maybe you haven't seen before. It's good for putting together first passes of letters, things like that, and kind of like giving you gut checks. It's not perfect by any means, and it is never going to replace sort of the advisory role that all of us provide, but it's getting closer. There's no doubt, right? It's getting closer, and it's in some ways good for all of us as well to kind of have in our back pocket and figure out how we can apply it and help out our clients. Because frankly, it's going to save us time in some ways in the future as those tools get further refined and improved upon.
I'd argue we can all service more people because of what AI allows us to do. And like you said, a client coming to you potentially with a draft they got out of ChatGPT and knowing how they potentially prompted it is a lot different than you going into ChatGPT and giving it very specific verbiage and saying, this is what I need. And maybe it's not there yet, but over time, it will enable the people who actually know and can advise, it will enable them to service more people at a higher level. So while it's good for the
And
general public, I think it's going to be a pass-through situation where it enables the best people to do more and give them more capacity, which then benefits the general public. And I think it could be very dangerous if the general public just says like, "Oh no, I can have AI review this contract and I'm good." And like, you
yeah,
can.
it's kind of funny. I know we weren't really supposed to be talking about AI today, but like looking at OpenAI's announcement, I don't know, a couple months ago saying that we're no longer going to be providing legal advice. Um, but it's still the platform's still doing it. And
Yeah.
so it's tough. Even I'll do a Google search or something, and before the first website pops up, you see that Google AI summary, and I'll take it as true just because we're so used to just seeing stuff in writing and assuming that it was fact checked before it gets to our eyes, but obviously that's not happening. So taking all that stuff with a grain of salt is important. I will say though, if you are totally new to accounting or legal and you haven't yet reached out to your accountant or your lawyer and you just have a really quick question, it's not a bad first place to go. Just make sure it's not the last place you go. I need to stress that anytime somebody brings this up because not only is it just not only is it wrong often, I think the deeper issue is it doesn't get the nuances of situations. Part of the value of engaging an accountant or a lawyer who's been doing it for a serious amount of time isn't just that they have like the schooling behind them, but they've actually seen issues play out over time. They're able to predict things a little more. That information is not available for AI to digest, at least yet. Maybe it will be in the future, but they're not drawing from that stuff of like, oh, I've seen this issue with the IRS play out in 20 different ways. This is how I'm going to talk to them going forward, right? There's no guidelines on the internet or books out there that AI can just read and then spit back out to people. So those are the things you really need to think about. When AI starts giving you strategy, take a step. What's actually worked here? I'm not sure.
Well, and
Yeah.
I would just even go further to say, Adam, that nuance that you're speaking about is literally what both of our businesses are built on of a specific niche. What applies if you're researching S corporations, just like we just talked about on, using AI platforms, any of them, what applies to a construction company or a
Yep.
partner, two partners starting an S corp, they have different expenses, they have different income types, they have
Yep.
totally different considerations, even state to state, there's considerations that it could be giving you a very general answer. We are niche down for a reason because we specialize in this type of client in these situations. And a lot of the times it's going to be giving you an answer that's very broad.
Yep. Yep. I've got creators that I'm sure would benefit from having any accountant behind them, but I would rather send them to you guys first because I know you've seen these specific issues. It's sort of just like, at the end of it all, I'm a contract and IP lawyer, and there's a lot of those out there, but there aren't as many of those out there that work in the creator space or the production space like we do at our practice. And that extra little bit of knowledge can make the difference between, screwing up a deal or not. And I've seen it play out in both the accounting and the legal space. So it's all, we're really kind of blowing smoke up our own butts right now, but it all kind of comes back to that, just being like, yeah, know your space before you can really talk about it and dive into it. Got about 10 minutes left. Again, if there's anybody in the audience who has more questions, by all means, throw them out now before we hang up. But let's just talk a little bit about, all right, we're talking about initial corporate setup, what makes sense now. Talked about just dealing with taxes, which, given that April's 2 months away, basically, it feels like that's emergency stuff. Let's talk about long-term planning, though. We already talked about sort of the interactions that the two of you and myself have been able to have with some of our clients. And I think long-term success for a lot of our clients is going to be building out teams and figuring out when to bring in other professionals beyond just accounting and legal. So let me put this to you. As a creator grows, let's say they're in their second or third year, what are the other types of folks they should be reaching out to and coordinating with in order to kind of make sure that they're getting the longevity out of their career that they need?
I mean, for me, it usually goes to that third tier. I always think about it in tiers: accounting, legal, and financial advisory. Gamel Financial, our firm doesn't specifically do financial advisory, but that's a big part of it, especially for these single creators that they've grown enough to truly develop, some assets, and a lot of the times it is cash, and it's cash sitting in a savings account doing nothing for them. And so, connecting them with an advisor that's able to truly start to help them there. If we're recommending, as Garrett said earlier, a retirement account, connecting them with someone who can manage that account, invest that money for them appropriately, that's what my mind immediately goes to. But even just furthering their own team, Adam, internally, we see a lot of the successful creators, even if it still is a one-man brand around a person, it becomes truly a media company when it scales up past maybe high six figures into the seven-figure mark, to where I'm telling them like, hey, this manager or this main editor or person that you've had now on as a 1099 for a few years, let's hire them. Like let's make them a core piece, because there's risk involved with just they could leave at any point, and they're managing a lot of what,
And I will say, for a lot of these creators that are bringing on 1099 folks to really build the backbones of their businesses, from our perspective on the legal side, they are often actually going to be deemed employees if any labor departments of any specific states look into it. So you really need to be careful about that. And talking to your lawyers and going like, hey, I've got this editor who's literally working 9 to 5, 5 days a week for me on a 1099. Does that make sense? Most lawyers are going to hopefully say no. You might want to look into making them a W-2, but that's when all these other considerations come into play. You need to start thinking about payroll. You need to start thinking about insurance potentially. I'm talking about like benefits insurance. You absolutely need workers' comp and things like that when these things get started. The costs add up, but at the same time, if you're doing it properly, it's going to help you avoid much bigger penalties and fines and issues down the road.
100%, man. And the thing is too, there is like you're going to pay for it later. If you don't do it right the first time, you'll think you're getting away with it. It is truly a cost of business you need to be considering.
Yeah, absolutely. But I like the point that, like, if you have a 1099 working for you for a long time, think about what you need to do to keep them happy to stick around, because I think a lot of businesses take for granted that they are built off of the really hard work and dedication of a lot of the people behind the scenes. And things will, if you are working with the same editor or same videographer for 2 years and they just up and leave after 2 years, your style is going to change completely regardless of who you get next.
Yep. Well, and additionally, Adam, you know this, but if they don't have a contract with that contractor, that main person, they don't actually have a written contract.
Yeah.
What's to say that it's not protecting them at all? That person can leave and go do the same thing for somebody else, use all the truly what is probably IP for what they've been doing for your brand for anyone else, and there's nothing you can do about it. Versus, even if they are a contractor, there should be a contract in place to protect you and to protect your company. And I'm telling you, most of our clients do not have that. They're just selling people, PayPaling them.
I'm aware, and you need to put me in a room with all the ones that I don't know yet, because that is terrifying to hear. from a copyright perspective, if you don't have a contract in place, that contractor owns the work. And if you are having somebody contribute to your channel on a daily basis without a contract, in theory, all the stuff that's going up on your channel, I don't know, best case scenario is co-owned by both of you,
And
which
and
means
Adam, we
that,
see a lot of the times on the YouTube front where
yep,
we'll have a streamer or a vertical form content creator on TikTok or Instagram that starts YouTube, and they'll
yep,
just basically pay an editor. And I don't even know if they have access to the YouTube channel. They literally, it's just like that person just runs the entire YouTube. They're
sure.
the one that uploads, they're the ones that put it all there. And it's truly fully outsourced. So to your point, very valid. Like we're seeing creators that do that and they have no consideration in their mind of like, yeah, they have a legal standpoint here if they really
Yeah.
wanted it, if this
And
channel
look,
blows up.
if you're in a position where you're paying anybody to do any work for you, there's no reason why you shouldn't have a contract in place. And I'm not saying you need a 50-page monster to
Right.
govern your relationship with them, but I say this in probably every single talk I've ever given in the last decade. Just get something in writing. Just put something out there to make it clear who owns what the job is, and how much you owe them, frankly. Like put in a contract what their compensation is so nobody's fighting about that after the fact. Because if you have compensation up in the air and ownership up in the air, and then this contractor is upset with the way you've been treating them, they're going to say, you owe me a lot of money and I own everything. And that's a terrible position to be in, which frankly, a lot of my clients have become clients because they were specifically in those situations and we had to get them out of that. And there's never a good way to get out of that. It's never easy.
Many people wait, just not in the creator world, but many people that run businesses wait until they get burned to reach out to a professional. It's
Yeah.
always going to be better to do it on the front end. Even if they reach out to you, Adam, to build a template contractor contract, and then you just tell them, here's plug their pay into here, plug this in
Yeah.
here, use this for anybody. That's, I mean, it's not going to cost them that much. They can now apply that at the very least to just cover their bases.
That's what we do with so many of our clients. It's like, just come here, let us give you something that you're comfortable using, put it
A
in your
tool.
back
Yeah.
pocket. Yeah, it goes in your toolbox. Anytime you have somebody new, you fill in their details. If you tell me enough about your business, we'll be able to create a template for you that fits perfectly.
Yep.
And that's it. It's not rocket science. It's literally just a matter of like talking for 20 minutes, understanding things. We'll come back with a few questions and be like, all right, here's your 3-pager. Go for it. If that's all you need from us, come back to us in like 2 years just to let us know how it's going.
For sure. I
Absolutely.
couldn't agree more. And I think there's a little bit of fear, and we see this with our clients, the content creation industry, of they just don't really know like what is that going to cost? Who do I reach out to? And making yourself known. I mean, Adam, the referrals from you and us trying to give them back to you has been so wonderful because a lot of times they just don't know where to start. And just saying, hey, I have somebody that I can connect you with. We've connected so many people, even for people that aren't our own clients, just people that we couldn't help, but we're like, hey, we know somebody that can get you started. That goes such a long way.
Yeah, I agree. And I think anybody watching this is just like, how do I get in a room with an accountant or a lawyer if you don't know one directly? Email them and ask for a consult. And most people are just going to say, take, yeah, here's 20, 30 minutes of my time for free. I want to learn about your business. I want to see what you need. If there is something that that person can do, great. If not, and they realize, just like Joseph said, like they just need to be passed along to somebody else, a good accountant or a good lawyer is going to happily just refer you off to their network. And I think the other thing is too, part of what has made my business prosper, frankly, is being able to build up a network of other professionals who do things that I don't do. Having Joseph and Garrett, just available by text, theoretically by Discord, but I refuse to meet them there. But just like easily available at any point to answer questions for my clients or just pass them along, even if they're not a client, is massive. It's people that I trust, that I know. I'm looking at Jillian saying, if a freelance creator takes content or leaves, is there really anything we as the company can do? So it's really going to come down to your contract. If your contract says that you own the content, that there's just a license back to the creator, you have your contract to go after. If your contract says nothing, then you're probably out of luck and it's up to negotiating and figuring it out. But it's always going to come down to the piece of paper that you have with that person, which, going back to Joseph's earlier point, like just get something in writing, figure that out, have that conversation up front, because once that person leaves and doesn't want to talk to you anymore, it's going to be much tougher to figure that issue out. And if this person's actually doing something in violation of your contract, you just need to decide whether it's actually worth escalating and doing something about. And that is a fundamental question any company needs to ask themselves when they're dealing with breach of contract. I used to be a litigator. My whole bread and butter was just like fighting with people nonstop, and every nail, everything looked like a nail to my hammer brain at the time. Now, a lot of what we do is we'll bring people in when they have conflicts and just go like, all right, let's assess whether this is really worth fighting for or just dropping because it's more of an ego hit than an actual thing that affects your business. So those are all the things you need to ask yourself. Lawsuits are expensive. Even just sending out a demand letter isn't cheap. And if you can't back it up with a theoretical lawsuit, it's also not worth the time half the time. So you got to look at your contract first, what's in there, and then decide what's worth fighting for after the fact. But make sure that the bottom line is like when you are establishing a relationship with a creator, make sure that the thing you're talking about up front, that contract or agreement, is going to have all that set out so it's not a big open-ended question for you later on. I think we're just about time. Oh, follow-up question. Are the laws for the state the company operates from or where the creator lives, or it doesn't matter? That is, so there are two things in every contract that should be in every contract that has to do with the state and city that you're in. It's called the governing law section and the section. Governing law is going to dictate whose state law applies to the contract if something goes wrong, and the jurisdiction section is going to dictate where that lawsuit's actually supposed to happen. That should be addressed in every contract. It's going to be its own section, usually towards the end. If it's not addressed, then it's a big open question that often gets litigated pretty heavily. If you're based in one state and you don't want to fight a contractor or a company that's based in another state, up front, you should negotiate where that jurisdiction and governing law is going to be. Otherwise, you're going to have to deal with competing conflicts of laws issues to figure that out, which is a very technical, convoluted area of law that pissed me off in law school to no end.
Even further, Adam, I mean, we see a lot of creators working with contractors overseas. So even more important there, where you need to have something in place because otherwise you're not going to have any ground to stand on.
Well, I will say with that, unfortunately, labor's cheaper overseas with a lot of editors and people in that space. And so we have creators who are hiring folks out there because it is just way more manageable from a financial perspective. The reality is that if you're hiring somebody on a totally different continent, if something goes wrong, your recourse is very limited because even if you have your contract say that the governing law and jurisdiction is somewhere in the US, you do a lawsuit here, but that person lives out of the country, that lawsuit against them isn't automatically, again, going to get them in trouble. You might have to hire a lawyer out there to enforce a judgment and things like that. It gets very complicated.
Which we've actually seen, you and I, with a client, mutual client.
Yes, we have.
We've actually seen that.
And I've seen it too often. And I think with that, the tough piece, and this is not a legal or financial perspective, but it's like contracts and setting yourself up with the right structure is very, very helpful. But at the end of the day, when you are bringing new people into your business, you kind of have to establish that you're going to have a good relationship with them. You have to get to know them. You have to understand who they are and not just assume that everyone out there is going to be fine to work with because you have a contract in place. Because before you get to the contract issue, there's the human level of like, is this person going to work out? Are they going to jive with the rest of my team? And if something goes wrong, how are we going to deal with that? Because by the time you get to a breach of contract issue, there's all of it, but you're going to be out money. You're going to be a massive headache as well. And it's going to take a lot of time. So really, when you are growing your team out as a creator in any space, be very deliberate about it. Really talk to those people, make sure you get along with them. And that also just goes to working with accountants and lawyers and other professionals too. Anytime you're growing your team out, make sure that you really get along with them as human beings and that you can be like, yeah, I'm going to enjoy talking to this person for the next 2-3+ years. I've had so many talks with newish clients who are just like switching over from other lawyers. And they're just like, I was dreading phone calls with them. And I'm like, that's stupid. That's really dumb. Aside from the like hourly rate, which you might dread, which is a whole other conversation, fine. But like, you should want to be able to talk to your accountants and lawyers to some degree. You don't have to be their best friend, but absolutely you should be in a position where you're like, I am at least looking forward to this call. Because while it might not be necessarily the most positive, uplifting news, or, I'm going to have to listen for 20 minutes about the difference between direct and third-party indemnification, at least it's going to be done in a nice way. But that being said, we are at time. It is shortly past 1 Eastern Standard Time. Joseph and Garrett, as always, thank you so much for joining us. If you have any questions for Joseph and Garrett, go back to our post for this webinar and look up their contact info. I know they are happy to chat with anybody who reaches out any time of day. They will pick up their cell phone, whether it's 2 in the morning or they're in the middle of filing for 500 people on April 14th. This webinar will be up on YouTube sometime in the next week or so. So if you have anything, just going back to like, what did these guys say? Check there first, but by all means, don't hesitate to reach out to us at any time. Garrett, Joseph, any parting words before I let you go?
We just appreciate you having us, man. It's always good to catch up. I think there's a lot of value in these conversations, and yeah, I look forward to the next time we get to do it.
We will see you next year at the third one.
Yeah, absolutely. Thank you for having us on, Adam.
All right, take care, gents. Talk to you soon.
All right, see ya.
Bye.